Ladies and gentlemen, a lot of bad news have come out that can potentially threaten the stock market bull run. I'm going to be sharing all of them, and make sure you watch to the end, because at the end, I'm going to also share with you what Jerome Powell gave in terms of his feedback for all these things that are happening. So today's topic is about bad news, bad news, bad news, and let's see which one will potentially hit us the worst. So this is my usual disclaimer. Please watch on. So one of the most serious thing that's threatening us right now is actually a potential oil shock. Now, quietly, nobody notices, but the oil prices has been escalating from $60 over right now to $85. And that's a very serious climb. Oil prices is something that can potentially cause oil shocks and inflation. And inflation is all about things that can kill us right now in the stock market, because with inflation or a risk on inflation, the interest rates could potentially stay higher, may even have to go higher to fight the shocks that's delivered by the oil prices. In 1970s, that was the reason why the high inflation that has happened, and it's all about oil, oil, oil. Right now, this oil shock is potentially climbing right now, and I'm actually getting very concerned. But let's see what the reasons for the oil shock, shall we? There is a lot of reasons why the oil prices are going up. Number one is that Ukraine has started to attack Russian oil refineries, and this has cut fuel supply to the world, and that's a thing that we all got to be concerned with. Even President Biden has told President Zelensky of Ukraine to stop attacking the Ukraine oil refineries. Ukraine president basically said that that's unfair game. They can attack us and we cannot attack them. What the hell is this? Now, I'm not going to say who's right, who's wrong. I'm just trying to say that Ukraine attacking oil refineries in Russia has a potential risk of escalating the oil prices. Now, the Israel-Hamas war in Gaza right now has potential to now widen. Now, all the while, if it's just a war between Israel and Hamas, generally there's no oil implication. There is an accusation that Israel has launched a strike on the embassy complex in Syria and killed quite a few Iranians. So Iran has vowed to retaliate. And once Iran gets dragged in, then the risk of a wider Middle East war starts happening. And this could potentially cause a serious oil crisis. And that's not something that anybody wants to see. So, of course, Iran, who has lost some high-ranking Iranian military personnel, is not going to sit there and do nothing. And it is the third largest oil producer in OPEC. So all these have serious implications in the oil prices. In the Israel-Hamas war, there is now an escalation as well, because the Israeli has just done an airstrike accidentally on an aid convoy, killing 7 workers from the World Central Kitchen. And these 8 workers are from Australia, Britain, and Poland. This is something that Israel has acknowledged, right? So with this, Israel has tend to now getting itself alienated by the rest of the Western world. And this potentially, has more complication in the whole Middle East war. We don't know how all this will unfold, but as you can see, this thing is not going to end really well. So we hope that this will not escalate to Iran, and this will not escalate beyond what is really is a mess. But I don't see a peace process coming soon. Meanwhile, on OPEC side, they have voluntarily cut more oil barrels a day. Right now, they have extended a voluntary oil production cut of 2.2 million barrels into the second quarter a year. This is aimed to stabilize oil prices. And clearly, right, it seems to be working. And Russia also announced that it will cut its oil output and exports by additional nearly 500,000 barrels a day. And all these certainly set a lot of jittery into the oil prices. All these supply cuts in oil production will potentially send the inflation even higher. On the demand side of oil, the China manufacturing sector, has registered an expansion in March. This might be the start of the recovery that everybody is looking for in China. When there's an expansion in manufacturing, oil prices generally go up because they need more fuel oil, to do all sort of production and traveling and transportation. And China is not the only cause of it. US economy is doing fantastically well. And that cost of manufacturing go up, and therefore that has a derivative demand on oil prices as well. So all this together, supply cuts, demand increase, turmoil in Middle East, all this culminated together into a terrible oil price escalation and potentially an inflation shock, which could then lead to interest rate cut being postponed, maybe even interest rate rise. This is something that is the worst case scenario for stock market. Something that is unrelated to US stocks, but I thought this is quite interesting given that it was formerly my company. Singtel has a share price drop, given that there is a potential deal between a Canadian private equity firm who wants us to sell a 20% stake in Optus for quite a high price. That has failed in a deal. And Singtel share price fell by 4.3%. I would just say that Singtel seems to be on a spree to sell many of its assets that to realize much of its value, which I think is the right strategy. So Singtel has actually denied any deals discussion, which is weird, right? And I always said that Optus is a integral and strategic part of Singtel, and they're committed to Australia for long term. So the current thing is to get a new Optus CEO and improve on the network quality. Everybody seems to be believing into the story that Singtel is trying to divest a lot of its asset and realize a lot of cash. And once you have a lot of cash, they'll return back to shareholders. So I think that's quite a big news. Not that there's any stock market implication to US stocks, but I thought this one is interesting to me as an ex-employee. So Tesla shares fell in response to a terrible news that their deliveries have dropped 8.5% from a year ago. And that's quite a serious news, okay? So Tesla report big Q1 delivery miss. As you can see, it has been going up, and then suddenly one big plunge here. And that's quite a serious fall. And the Q1 estimate is on the dotted line, which is about 449,000, and now it's dropped to 300,000. That's quite a big miss. So this is something that the stock market frowned terribly, and this has implications to S&P 500 because it is an index stock of the S&P 500. So the Magnificent Seven, of which Tesla is one, has now dropped off the Magnificent Seven already. So one of the Magnificent is not so magnificent anymore. The good news I have for myself is that, hey, I already sold my Tesla shares, every single one of it, okay? About a few weeks ago, but that has really come down quite a lot. I think there's some videos I've talked about previously that I procrastinated. Procrastination is a bad thing. I don't like stock picking. This was one of those things that accidents that happen, but thank God I've sold it off already. Maybe rise in future, I don't know. Okay, let's just stay in globally diversified index. I think it's something I'm more comfortable with, and I'm going to stick to it. I think among all these bad news, the biggest one that I'm most concerned with is about inflation. Because inflation is the one that Federal Reserve is most concerned with right now. They have been watching very closely. There is a very clear and present trend that the inflation has been declining for the last many months. But every prevailing time where the inflation has fallen, there are a lot of noise on the side that can threaten a reinflation, and that gets us very jittery. I must say that the Federal Reserve is quite calm about this whole thing. But they have always said that, we have to watch incoming data to come to a conclusion. It's unfortunate that the US economy is registering such a high economic growth. Therefore, there is no urgency for the Federal Reserve to cut interest rates because inflation is still raging, and there is nothing needed on the economic side to stimulate the economy. So the likelihood is for the Federal Reserve to hold the interest rate cut as long as possible. So will the Federal Reserve delay the interest rate cuts? Well, it depends on all the bad news that are happening right now. And if the oil price were to spike, then, that will cause interest rate cut to be significantly delayed. But fortunately, the federal officials that have come out so far to talk about interest rate cuts, they are all anticipating still 3 interest rate cuts, with a lot of caveat that it all depends on the incoming data. Jerome Powell yesterday gave a speech at Stanford University. In that speech, he reiterated that the fight on inflation is still not done. He didn't say anything really that new, but they want to have really strong confidence before cutting interest rates. So this is something that they have not stopped saying, that until I see good inflation data that can drive up a lot of their confidence that inflation will hit 2%, not 2.5, not 3. They must hit 2%, non-negotiable on 2%. Then they will actually start the cutting rates. So let me say that again, okay? Unless they can see data that confidently lead them to believe that they will hit a 2% interest rate, they will not cut interest rate. And this basically leads us to now, unfortunately, believe that the interest rate cuts could be potentially delayed. So this comes from the Fed Watch 2 of what the market is predicting in terms of interest rates. Most people still predict a rate cut by June, but more and more people are predicting a rate cut now by July. So you can see that the optimism is actually now going down and down and down. The hopes are beginning to fade away, and that has hit the bond market quite a lot. The stock market is still holding up well, but the bond market, where people was anticipating previously a rate cut early, now they are all pushing it backwards more and more. So this is something that everybody got to be patient with. All this bad news from the inflationary aspect of the world, especially from oil prices, is not giving rate cut good news. But you know what? Let's watch and see, shall we? In conclusion, let me give everybody this advice from Warren Buffett. The stock market is a place where wealth is transferred from the impatient to the patient. All this noise that's happening, if it gets you jittery, is something that you need to step back and close your eyes and shut your ears. If you have a globally diversified index, you don't need to be worried about all this, because the market will eventually correct back into a path that will be climbing in the long run. But all this short-term volatility does hit everybody. And I've said before, again and again and again, the stock market is going to have a very, very volatile recovery. And this is what we are seeing right now. So let's watch and see how the stock market will play out all this bad news, and we shall see almost on a daily basis. So please watch our YouTube closely, and like and subscribe our YouTube channel, and join us our Telegram group, where we have got 35,000 people over there helping everybody to do well financially. Thank you, and I'll see you in a day or two. Bye-bye.